Episode of Bullish Chips, where we talk about trading chips and nothing but chips, and more specifically the ticker symbol SOXL, which is the Direxion Daily Triple Leveraged Semiconductor Bull ETF. My name is Chris, and I'm going to take you through the charts real time as I see it, and just kind of show what I'm seeing in the charts from a short term scalp day trading level to swing level, long term swing level, 1 to 2 years. Um, right now, we're looking at the 15 minute. It's Friday, June 27th. We had a interesting day, something that could be a lot of people could call expected, since we have been pushing so hard to the upside. We can see that we did, excuse me, open up just about where we closed yesterday, maybe a little bit higher, but quickly closed that gap and then pushed higher to reclaim that 1 hour uptrend line that we drew from yesterday. It didn't stay there too long though, and you can see as it failed that trend line, it did come down to make a lower high on the 15 minute. I personally did not get in on shorts at that point in time. Although it was a lower high, it was following a higher low, and considering we've got full time frame continuity to the upside at this point on basically every time frame but the year. Um, it didn't make sense. We're also above the opening print of 25.21, and so you want to be a little bit more conservative. SOXL is a high beta stock or ETF, and it gives you a pretty big magnitude on its moves intraday. So, it can pay off to be patient and wait for a better trigger. So you can see after it made the lower high, it did go on to make a lower low. And what's important here is it made a lower low below the opening print. It went up, made a lower high, and once I saw the 15-minute candle turning into a shooter or inverted hammer, although it was still green, I knew that RSI was pretty high. We were pretty oversold at that point, and we'd had a good run all week. It's the end of the week. A lot of people like to de-risk before the weekend, especially in today's fast-moving news environment. A lot can happen over just 2 days of a weekend, and when the market's not closed and you can't react to it immediately, you want to kind of de-risk a little bit going into the weekend, if you're a short-term trader. So with the lower high, we watched for the trigger of the breaking the low of that candle, triggering the two up, two down. The key again is it's at or right under, excuse me, the opening print of 25.21. When it did go two down, as soon as it went two down, we did enter. I did enter right here, with the stop loss just above the high of the previous candle, the lower high. If it did end up going higher low, I wanted to be able to get out at a good position, minimal loss. As soon as it would trigger, go above that high, I would have sold and taken a minimal loss, but keeps your risk reward intact, and we follow our rules. So it did break down. We see went below yesterday's low. Actually, no. First, it was pushing to yesterday's low and had a pullback. Again, we left our stop loss above that high there of the lower high, and really just wanted to watch. We're in calls. We've got plenty of money going to the upside and mid and long term swings that we can kind of keep this put as a hedge, and let it breathe, not have to have a tight stop loss. We could have gone to the even the 5 minute and seen if there was any type of lower high, right, even lower down here that we could have set. But again, it went up it fell back under the 1 hour downtrend line that we drew from yesterday, and left out there, which in and of itself isn't a whole lot. We're not big trend line traders, but it is something to keep in mind and take a note of. So with the rejection off of that, it gave us the confidence to stay in that trade. Once it broke below the lower low, I went ahead and moved my stop to just above this lower high, again preserving some of the profit that we've accumulated, and just following our rules. Again, we knew we're not going to be in for a long time. Full time frame continuity for the most part, except for the intradays, was to the upside. So you know we needed a pullback on the 1 hour and 4 hour, frankly, anyway. So we knew we could have caught some type of support from previous days. We have support here. So setting the stop loss just right here, just in case we bounced off of support, was a good idea, just to preserve some capital. It never did go back up and retest before pushing down to what was our target point of previous lower day. Let me go to my intraday chart so you can see the previous lower day. I did have the target point of previous lower day, since we were below the overnight low, which technically is what we really rejected off of, not this downtrend line. Again, we don't need the trend lines because we have actual horizontal levels, and you can see it came into play, but I like to leave them there to see where the confluence is at, and kind of bolster the reading of the chart that I'm getting, in that this should be a resistance point. So again, we rejected off of overnight low, went down to the target of previous low a day. I didn't take profit here just because we were in such good position at that time, that and because this candle did present us with a soft higher low and being a 3 and having that higher low there, went ahead and lowered the stop loss to here. We came up, didn't even quite retest it, pushed down. I was thinking about taking profit here because you can see this orange box is the day's expected move. We were at the bottom of the day's expected move, but we did have the uptrend line right here on the daily, and also this is a daily broadening as well. So there could have been more room to push down. I didn't want to pull the trigger too early. We have pushed pretty hard this week to the upside, so there could have been more to the downside that would have been reasonable, especially on like the 4 hour chart and even day chart. So went ahead and kept our stop right here at this soft higher low. Had an opportunity to move it here, but decided not to. Again, wanted to kind of let it breathe, didn't want to tighten it up too much. Got some more play down here to where, especially with this shooter and the 2 down, I thought we could get another push to the downside, but we did stop here for the higher low and go back up. So at that point, I had pretty much knew that we're probably going to bounce here. How high, though, was the question. Again, we're coming towards the end of the day. A lot of people like to de-risk. Now, on the flip side, there can be a squeeze that can be put in place for all the people, the long or the old, sorry, not the old, but the new shorts that got in at bad position, which was the break of previous lower day, which a lot of people, were ready to jump into there. So you could squeeze a lot of those people out just by going back to the overnight low, which is exactly where we went to at close. But kept the stop loss here, let it retrace probably a little bit more than we needed to, but again, we were letting it breathe. We could have put the stop here, got a little bit more profit, but we had, I think, 4 contracts, and it was decent enough profit. So went ahead, kept the safe stop, got stopped out at that point. Again, 4 contracts, good profit, and really just sat on our hands at that point. Again, had plenty of calls for the July monthly expiration, the September monthly expiration, the November monthly expiration, and then as well as the January 26 and January 27 calls that we have. So at that point, the day was pretty much over from a trading perspective. Once the stop got hit, it was just pretty much get out your popcorn and watch and see if we really would push, how high we would squeeze, if we would squeeze, or if it would go ahead and fail again and push to the downside. If so, that's fine. We wouldn't need to try and get in on that downside so late in the day. Just let it go. It's Friday. Friday rules. Let's go into the weekend feeling good and get ready for the next week. So at this point, now that we've recapped the day, let's go ahead and chart out our levels for Monday and the start of the week. Now, Monday is the last day of the month, which is the last day of the second quarter. So we'll be going into the second half of the year. Third quarter, especially the beginning of third quarter, and especially for tech, is usually a pretty good part of the year for tech, going to the upside a majority of the time. So we want to keep that in mind. We want to keep in mind how the monthly candles are shaping out now, because the month is over. Yes, it did start on the lower side, still kind of hanging around from the April 7th dip that we had, but let's go to this swing. Go to the month, but we had a real solid month to start out. Like I said, we were still down at lower levels to start the month out. Let's make that a little bigger and let's get to the better drawing set. So we did start out around the $16-17 level, and it was still kind of touch and go whether or not we were really going to push up because of the candle structure from the previous month being an inverted hammer. We could have pushed up a little bit, stayed within there, been an inside candle, and pushed back down for a 2 up, 2 down, which would have triggered more downside pressure. But instead, we broke to the upside and broke hard and pushed hard. We rode that wave. We were already in position from April and even May. So, personally, I see us pushing further to the upside. Last quarter's high, which was first quarter of 2025, was 36.15. We've got the 61.8 fib of the 2024 run up sitting right there as well. So that's another level of confluence. So if we don't get any resistance here at the 61.8 of 2020, which is the 30.55 level, if we push through this and the monthly downtrend line that we have here, and we flip the year back red, which the year flip is right here at 28.13, we're looking in good shape to push probably up to this 35.36 level. That also falls in line with this 3 that we have here with a high of 36.15, so which is the last quarter's high. So we're I'm looking for things to probably push to about 35, 36. That's right now. We continue to watch things day by day, week by week, and we continue to evaluate. We could get a failed 2 up. We could start moving sideways. We do still have a couple of gaps here to the downside. That are left around. This is 22.63 to 21.98, and then even back down here at the $14-15 level. I don't think we'll fill these ones down here this year unless something really crazy happens. At this point, we've got the Fed, or it being priced in, that we'll have 6 cuts by the end of next year, 2 possibly this year, 4 next year. That tariff thing seems to be cooling down. We're coming to agreements with other countries. Again, seasonality. So, in my opinion, things are looking more towards the upside as well. We do have this moving average here that we need to get above. And again, that kind of falls in line with this monthly downtrend line. So I expect some resistance here. Again, the 2024 run up, this 78.6 fib, first quarter's 50%, and even you can pull in last year's low, all in this $23 to $26 area. So I could see some choppiness here, which really on like the weekly or daily perspective, if we do get some chop there, if we do get some chop around here, this could be just like a flag, even if we fill that gap, that might actually be a perfect flag, because a flag does show a little push to the downside before push back up. You can see here was a flag here. We've already pushed to that magnitude, but it looks like there was another flag there. So even if we don't extend this flagpole up here to magnitude of this flag, we could start flagging out here as well. It could be considered a flag as well. So just kind of keep that in mind. But we've got our monthlies looking real good for the upside move. So we like where we're sitting in our longs. We'll continue to play things looking for pullbacks on the short term, day to day as well, as long as that daily trend is moving up like it is. But yeah, let's get into the charts, and let's really break things down and get our lines drawn. So here we are back on the 15. Again, it looks kind of scattered when you're zoomed out and when the candles aren't as big, but through all the lines we can see we've got to move our 15-minute downtrend line to here and here. We've also got to make it dashed to signal that's downtrend line. So no longer in a 15-minute uptrend. Here's that 15-minute uptrend line, that short dashed line going to the upside. So we can go ahead and get rid of that. No longer in an uptrend. And let's just take from this low. Oops, if we can get the right. Turning here, drawing here to there. Let's make this blue so we know it's the 15. And of course, that's all we've really got on the 15-minute time frame. You see, we broke right to it. If I would have drawn that in intraday, we would have seen that that's where resistance was at confluence with the 1 hour overnight low. So it's a good. It's good that we're seeing it stop there. We had those levels. It kind of confirms those things. So let's go ahead and get rid of the opening print. Let's switch to the 1 hour. Get a little ugly at first, but let's get our eyes calibrated. And I'll go ahead and leave the 1 hour downtrend line right here. Get rid of the uptrend line. And we'll change this to the most recent broadening, and we will take this to the most recent broadening. Make this light blue so we know it's the hour. So you can see we've got our 15-minute downtrend line, 15-minute broadening. There's no upper 15-minute broadening because there wasn't anything there. We do have the last 1 hour broadening to the upside, and then we see we've got our other 1 hour broadening to the downside. Let's go ahead and switch to the 4 hour. Gets a little hard on the 4 hour. I understand, but this is all for a bigger purpose here, right? So let's that there. So there's our 4 hour broadening to the upside. No need to draw any uptrend line. We've got our 4 hour broadening to the downside there. We can get rid of the old one. So okay, we've got our 4 hour broadening to the upside, 4 hour broadening to the downside. We've got our hour, 15-minute downtrend, 1 hour downtrend. Let's go ahead and look at the day, because we did go 3 on the day. Let's draw. It is considered a soft high. So let's go ahead and let's get rid of this old one and draw a new one. So we got a new daily broadening in there, if you can kind of see it. From this high right here up to this high right here. We left the old daily there as well in case it breaks through it. We've got another reference point, and you can see to the upside it would cross if we did get like a big up day on Monday, gap up and go or something like that, we would see the resistance probably about here because we've got the daily broadening, we've got the fib, and we've got the last quarter's flip, or this quarter's flip. I'm sorry. So let's get out of this day view because that's hard to read. Well, actually, we've got to go to the week view, which is even harder to read because we've got to move our fibs for the week. So activate. Here's last week's high, 50% and low. We move that to this week, and let's get out of here. Let's go to the 1 hour. Let's go to our 4 hour chart, and we'll get rid of that. Activate. We'll move that there. We'll leave the downtrend line there. We'll make that gray. Alright, so we've got our lines for the hour. Let's go to the 4 hour. Let's activate that. Put it there. And get rid of this old one. And let's go to the day. Go there to there. And get rid of the old one. Alright, let's go to the week. Grab our fibs. Oops, it's all part of the process. All part of the process. Again, you don't have to do things exactly like I do. You may see things that you like. You may see things that you don't like, but take what you want from it. Again, I'm just doing this real time, and I'm just kind of putting my thoughts out there. I'm not saying that they're always right. I've taken some losses, but this strategy, I use this strategy for a reason. It took about 3 years to develop and 2 years to show consistent profitability and consistent winning percentage before I felt comfortable even putting this out here. Again, I'm still just new to the YouTube game, but I don't even want to call it a game because I'm not really playing it like a game. I'm just putting my ideas out there because I think it could really help some people. I have what I consider to be a trading partner. Who uses some of the methodologies that I use, but he also has his own methodologies. And I think that's another good thing that I've developed over the years is someone that, like, throughout the day I'm talking with about my ideas, listening to what their ideas are, and telling them what I'm trading also keeps me honest, right? It makes me follow my rules as well. I don't have the ability to, well, I'm not going to lie to them, so I'm not going to let my rules get broken and sell at a big loss because I didn't follow my, sell at a lower low strategy or whatever, because then, when I tell him, oh, well, I lost this much on this contract, he's going to ask me, well, why? Don't you have this and this in place to keep you from doing that? And then, I've got to own up to that. So instead of being in that position, I follow my rules, and having a partner helps me do that. I'm going to go ahead and forgot to remove the opening prints. And let's see, swing. We didn't move the week, day. Got off for that. Let's go to the week. Alright, let's move this last week fib. Activate. Move it to this week. Oh man, and that's a 1-3. That's a beautiful strat. 1-3 is a beautiful strat. It tested to the downside and had no success. It just blew through that. So let's go ahead and look at the week, because what we can actually do, stay on the week here, because what we can do is we want to get rid of this downtrend line. We've clearly blown through that. Get rid of this downtrend line. We've clearly blown through that. We really should just get rid of this one. It respected it for a second and then blew through it. Remove that drawing. and we'll leave this daily broadening formation right here in place just because we haven't fully broken through it. Yeah, we've poked through it. I'm talking about this broadening formation right here. Yeah, we've poked through it, but we're getting some rejection. It could be kind of respected as a broadening, kind of in there. We just got to let it play out. My guess is we're going to go ahead and remove that here pretty soon. But again, we'll just kind of take it day by day. But what we can also do from the week chart perspective is we can draw an uptrend line. Activate. Because it made that low. It's a soft low, but it made that low. And we know we've got that in place. So let's just do it on the others for consistency reasons. Activate. Gets real hard to see through on that 15-minute, on that day trading and scalping chart, but remove. All right. Let's draw it in on this one. I don't usually have it on these higher time frame charts, but again, for consistency reasons, we'll go ahead and put it in. Edit. Put the wrong dash line there. We need the short dashes for an uptrend line. We'll get rid of, oh wow, I haven't updated this one in a while, it looks like. I usually look at it with the fibs. This is with no fibs, so that would explain why those are not on there. Alright, so now that we've got that marked up, let's go ahead and let's, on the 15, remove this downtrend line and that downtrend line. And on our 4 hour, think or swim, have to think. Alright, so now we're getting cleaned up a bit. Yeah, things are looking good, guys. Things are looking good. We like the position we're in with our shares, with everything really. So let's get in here and mark out our 4 hour time, our 4 hour markers, which is yesterday's high. Activate previous high a day, move it up to today's high a day. Activate the 4 hour up signal, move that. Activate the 4 hour down signal, move that. And we'll move the previous low a day down to today's low. Oops. Alright, so we'll do the same on the 4 hour. Activate, move that down there. Again, now this is so that we can, do a quick look at our 6 grid and understand exactly where everything is at on the different time frames. So if we go ahead and look at our 6 grid, that's TQQ. This is so we can look here and see, okay, on the 15 minute, on the 1 hour, we've got everything marked up so that on the 4 hour, we don't have to have all these lines because we're not looking at it from a 4 hour perspective here. This is for our scalps. This is, again, kind of for scalps, more day trades. This is definitely day trades, maybe overnight swings. The day down here, definitely for day trades and the overnight swings, weekly swings, and then the week we have here for the monthly swings. So, keep all that in mind when we're going through the individual, these individual charts here, where this is our micros, this is our micro macros, or our mini, macros, and then macros are these bigger charts. So we got to make sure to get all of them in the way that they need to get in. And let's go back. All right. So the other thing we need to do is chart out the weekly move, right? So let's get this as a trade. So if we look at the options chain for next week, we can see there's an expected move of $2.26. So 25.11 plus 226. We'll do 226. That's 27.37. So oops. Go over here. Edit properties. This to upside 20. Oh man. Let's say 27.37. So about 37. And 25.11 minus, let's see, let me pull out a calculator for that one. 25.11 minus $2.26 is 22.85. So we'll go back over here and 22.85. Actually, what we'll do is take that. Now we moved our box up to the next week's time frame, and you can see we've moved that. So here's next week's projected move. Somewhere between 27.50 and we'll say 23, right? So keep that in mind going into next week. We had a pretty huge week this week. We went from 22.50 to 25.88. It's like a 6% move, maybe for. Actually, let's see what it is. No, I'm sorry, it's way more than a 6% move. That is about a 15% move on the week. So. Not surprised to see that next week's expected move is a little bit smaller. Give the market time to digest the move that was just had. That's why I said we may flag next week. Again, I'm just doing this in real time. It's funny that it kind of plays out like that. Instead of the box being, from like here to here, or from here to here. Instead of seeing something above or below, really, we're just seeing something sideways. So we'll take it in stride by stride, day by day, and see how it all plays out. But yeah, we've just marked out our 4-hour markings, and previous high is a day, previous low a day. Let's go ahead and get our overnight high and overnight low, and again, they'll probably change pretty largely over the weekend, but we like to just get these put in. That way it's a little bit easier to just move the mark on Monday morning before the market opens. It's not so much moving of the mouse, and can just get straight to analyzing what the morning is doing. So here we've got overnight high, overnight low on the 15-minute, and let's go in on the 4-hour. And get this put in. Oops, I don't know why I just did that. Go up here. Okay. So there we have it. Let's go ahead and take the extended hours off, and you can see that we've got previous high a day, which is also last week's high. We've got the 4 hour up trigger. So let's see what we're in. We're in a 4 hour. Oh yeah, we've got the two up, two down on the 4 hour. So if it does trigger up, we've got the two down, two up with a target point of yesterday's high a day. We've got the previous low a day, which is also the 4 hour trigger down. So if we do go down, doesn't really look like we've got a combo strat. It already played the one, two up, two down. This would just be kind of like a combo up, combo down. This is right here kind of considered a pivot machine gun. So boop, 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 machine gun is where it fires a bunch of bullets to the upside or to the downside, depending where you're going. But it fires a bunch of bullets to the upside, and you can see the pivot, and you can go back down. So it's other people call this thin structure because there's not a lot of action up and down. It's just straight up, and a lot of that needs to be resolved. There's a bunch of action just to the upside, and downside didn't get their fair share. So look for that on Monday to be a possibility. If we don't trigger the four up immediately, like from if we don't open above this 25-35 level, there is a good chance that we could go to the downside. You could also look, even if we do open up above that level, or even if we open below that level and push up, we could hit this monthly downtrend line and go for like a failed two up, which would just also be a lower high on the 4 hour, which would be kind of a signal that, hey, we're probably going to be in it for a bigger pullback, possibly eyeing this this gap. We can get rid of this daily downtrend line because that's clearly blown through that. But yeah, we could be targeting the gap next week, just because it is right around last week's 50% line. Also, we do like to see the tests of the previous week's 50% to show strength. So if it does break below that, we're looking to go fill that gap, and at that point, we could be trying to see the bottom of this 4 hour broadening. If we clear like the 50% of this 4 hour broadenings we've got going here, if we go past that, there's a good chance we're going to at least test last week's low. If we test last week's low, it could go two down and just set us up for a 3-2 down, 2 up, pushing back to the upside. Because if we look, this week was a 3, and frankly, one of my favorite strats, one of my favorite reversals to play is a 3-2 down, 2 up, because there's usually a pretty good amount of magnitude from the 3, and then the failed 2 down, doesn't always push that far up into the 3, which leaves the magnitude. You can imagine if we go below here and then push back up by the end of the week, we close back here, maybe just turning the candle back green, or possibly even staying red. But then if after next week, the following week, we end up going 2 up, now that then look at what we got from here to here as magnitude in expectation, with the broadening being higher. When we all know that, once you take out one side of the 3, you normally go and you start getting back into the 3, you go take out the top of the 3. So we probably would break above this 3, go make a new high, put more pressure on this monthly downtrend line, put more pressure on flipping the year back green. And if we flip the year back green, at that point S&P and QQQs are hitting all-time highs. We get people piling back into the market. That's where we could push back up to that 35-36 level. At the very least, this $30 level, it is kind of another, it's in that area of resistance still, and it is the 61.8 of the 2020 move from bottom to top, which me personally, I'm gauging all movement in the market off of the 2020 action, because that's when a whole new group of quote unquote investors or traders started putting money into the market. That's when I really saw the market change how it acts from a day-to-day, week-to-week perspective. And so that 2020 low to 2020 high, it was really the first week of 2021. Um, that to me is, we're just playing within that from now on. So um, that's what I'm looking at. Sorry, that's what I see. I'm not sure if you guys can really see it because of the all the lines on the chart, but yeah, this is what I see. You know, we've got 2020 right here, and 2020, 2021. That was the big move. That was all the money being injected into the economy. That was, you know, stock valuations going crazy, or stock prices going crazy. And then we had our almost 100% retracement, creating our monthly broadening formation. You know, everything else is playing within there. So, technically, from a broader perspective, we, probably bottomed on that April 7th. We could always go back down and test to kind of confirm bottoming. Personally, I don't know. I don't think I would mind that much. We know how to short the market. We've got 100 over 100 shares of SOXL, so we can sell calls on the way down for anybody who thinks that we're going up. you know, depending on how we work it, I wouldn't do that too far down because I don't want to take away from profit that we might get on shares if we do get called to the board or if things reverse. But it's another option for us to take. And yeah, we get past this resistance right here. I see us getting back up to that 36, 35, 36 area. So again, this is just me live, giving you my thoughts. Nothing scripted, nothing written down. I even recap the day with you guys. First looking at it first for myself. So hopefully you guys are doing well out there. Hopefully I've given you something that is useful to you. Maybe I've confirmed what you've seen in the charts. If you see something else in the charts, let me know in the comments. Again, I'm new to the YouTube, and I'm open to constructive criticism. Please be constructive with it. I'm just out here, like I said, just sharing my thoughts. You can take them or leave them. If you don't like my channel, you can leave it. No need to really leave negative comments. But if you like what I'm doing and you think I can improve in something, let me know. I'm open to any suggestions or anything that might help someone learn a little bit better. If you see me doing something that needs a little bit more explanation, let me know, and I'll be glad to go over that in the next video. Or I can link you to one of my previous videos which shows a little bit more in depth of what lines I've drawn on here. Again, these lines have been drawn for some of these for years, but give you a little bit more of the details of my trading methodology and how I chart. Again, I use the strat from Rob Smith, and the intraday levels of previous high a day, previous low a day, overnight high, overnight low from Trade Brigade. So I draw from others and just kind of put it together the way I best see it and the way that works best for me to trade consistently. So again, drop something in the comments if you think I can do a little bit better. Drop a word of encouragement if you think I'm doing well. And happy trading. Have a good weekend, and we'll see you on Monday.